Coming to you live from downtown Detroit, this is Benzinga's PreMarket Prep with your host, Joel Elconin.
This is a volatile puppy here, isn't it?
And Dennis Dick.
I'm bidding a penny. I will buy the stock for a penny.
With everything you need to start your trading day.
Good morning, everybody. Welcome to this Monday edition of Benzinga's PreMarket Prep. Spencer Israel, Joel Elconin, Dennis Dick with you guys here. It's a heavy morning in this in the market across the board, pretty much. Tech is down. Everything is down, it seems like, except for Bitcoin and gold. So we'll talk about why that is, where the money is flowing today. We do have some individual headlines to discuss, but the general theme of today is that the market is down, and we'll just track that throughout the morning and see where it takes us. Our guest today, Sean Emory, the founder and CIO of Avory and Company. He was running the show at 8:35. In the meantime, Joel, break down this Monday morning weakness for us.
Breakdown, that's a good way to look at it. Pre-market high, 29.3350. That was just above your closing price of 32.50. Sellers came in and they came in force. They've taken us down to 28.8575. June 14th low, right in that area. We've already exceeded our average daily range by quite a bit, so there is some hope here for a rebound. Below that, 28.7150 is another daily low, but let's keep an eye on the pre-market low as well as mid-range in the session at 29.10. Moving on to crude oil, continuing weakness here, down 68 cents at 54.98. Gold rallying, gold doing what it should do in these kind of circumstances, up 1370 at 1471.20. Look at 1500, and that is your next target. Silver in the green as well by 20.5 cents at 1647.5. And when you can't buy stocks, you don't feel like buying gold or silver, you can buy Bitcoin, up $1,400. The futures trading over 12,000. Triple D, I really thought you would be locked in the trade cave this morning. We wouldn't be hearing from you, but glad you could join us.
Yeah, I'm here. It was a quiet Friday night. So, a lot of times I have a lot of overnight positions if I'm trading the night before. Typically on Friday night, I take off early. Also, Friday night, there was just no action. The market was trading up 2 S&P handles. There was nothing going on. Very unlike this morning, because the fireworks started last night when the yuan started to get devalued here, and it's been straight down for the markets ever since. And we're trading down significantly here. And it's amazing. We look at the markets 3 days ago, and you're kicking around all-time highs. And then obviously the Fed decision came out. We sold off significantly, got it all back the next day for a moment. And then the Trump tweet that set us in this downward spiral that has continued for 3 days now. We're obviously up there around 300 on the S&P or 3,000 on the S&P futures, whatever you want to look at. We are now down on the SPY at 288.74. So we're talking about the market losing about 3.5% to 4% here in 3 trading sessions. It's been straight down ever since that Trump tweet on Thursday.
Yeah, and that was after a rate cut, right? The rate cut that everyone wanted, right?
Well, it was the tone, though. The tone sounded a little dovish, or sounded a little more hawkish, like an almost neutral stance, not hawkish.
Correct.
But it wasn't dovish enough. And that's why they sold it off. And then he obviously corrected himself, and we rallied all the way back. So, he gave a dovish statement on the conference call, and that's when we came all the way back. But that doesn't even matter anymore. All that matters to this market right now is China. And when you see what happened here over the weekend, obviously, there's going to be some selling pressure coming in. And what we're talking about is the yuan weakening against the U.S. dollar. And this is obviously China's, as people are saying, it's China's retaliation here against Trump.
Yep. And it's going to continue. And I think it could continue until November of 2020. I mean, I think that overall, you don't have the let's say the political environment that you want to have, right, for a strong market. But let's move on to individual movers and
everything.
Let's talk about something good. ALLK up $20.94.
I have no idea what that even is.
I didn't either until Spencer told me this morning.
What is
ALLK.
Alacos.
It's more or less the only stock on my up filter.
Okay, yeah, and I was going to say the same thing. So I'm looking at 200 stocks here on my screen. I see a few stocks up. They are all gold stocks, Utility stocks.
And drug stocks. And this
Not even drug stocks. What drug stocks up?
Well, this one,
Well, that's what those. I'll tell you, all the drugs are down. So like Merck, Pfizer, they're all down too. So this is literally, this is not on my screen. This is not a stock that I obviously would watch regularly. I'm talking S&P 500 stocks where I'm watching.
Sure.
I have no idea what this even is.
Sure. Well, they met.
There's so many other headlines there that this would not even cross me to think about talking about.
Well, if you're looking for good news.
That's the only reason, Dennis. I just wanted to mention some good news in the stock.
Yeah, sure. What is the news?
They had a drug that met its primary and secondary endpoint. So good news for a phase 2 study.
What's the trading range look like on this?
It popped up over $56, actually went to $58. You're starting to leak. You're $6 off this high. And the other reason I just wanted to mention it is like no one thought this was going to be a good trial here. The stock in July was at 44. It closed near the low at the low of the session on Friday at 31. So this is one of those circumstances where, it's up 21. It's down $6 off the high. If you're long this stock, you want to see this thing go 53, 54, 55, take out 56 and just keep on going. If not, there are so many people stuck in this stock from $60 and above. I can't believe that they would, in this kind of market environment, they wouldn't come in and try and take some profits. But keep an eye on that.
These things are their own animals. When you're trading these, and I trade these things every once in a while, but usually I don't because we know I like to trade within the S&P 500 because I can control the risk better. But these small companies on these drug trials are their own animals. These stocks can go anywhere. Sometimes they pop. Sometimes they give it back. Sometimes they continue to go. I have no edge in trading something like this. That's why I don't even look at something like this because there's no edge. Even on a normal day where the S&Ps are just flat or trading higher, something like this, people are attracted to this type of stuff because they think they can get rich fast. Everybody wants to get rich fast. I'll tell you, I've said this on the show before. When you come into the market trying to get rich fast, it's a way to get broke fast. There's some people that are very good and they can trade this type of stuff. I'll tell you, this is if you're a new trader and you're coming into stuff like this. And I did the same thing. When I started trading in 1996, so we're going back 23 years ago, I started trading penny stocks on the Vancouver Stock Exchange. Why? Because look at the money you can make. And you go and, and you're trading these things and you're getting a feel and, so it's a good educational tool and everything. But, I look back to what I was doing and what I was trading and I was just taking a lot of risk. And yes, there's return there, but I'm so much more consistent with my style of trading now. So newer traders are attracted to Bitcoin. They're attracted to stuff that they can make money on quickly. I am very conservative. And this is a job for me. I don't have another source of income. I have to make money trading stocks. So I want stocks that I can trade based on relationships, based that I have edges on. So taking it, for example, stocks I'm going to be focusing on today are the bank stocks. The TLT is up $1.82. It's taking off. So right off the hop. If I just woke up and I was up for 1 second and I saw the TLT trading up 1.3%, I would know immediately that the banks are going to be very weak today without knowing anything else. Now you come in and you see the S&P's down 1.2%. The banks are going to be really weak. So before I even bring them up, Bank of America down 2.5%, Citigroup. See how predictable that is? I haven't even looked at those, but it's predictable. So that's what I want to trade is stuff that is more predictable. I don't want to trade stuff like ALLK that I have no idea where that thing. It could be 70, it could be 40, it could stay at 52, it could go anywhere. Stuff like that is very hard to predict. I want to trade stuff that's more predictable. So that's why stocks like this, if you're having fun, you're bored and you want to have some fun, go ahead, trade it. But if you're just learning to trade and you're trying to come in and trade stocks like this, you're trading the hardest stocks that are very unpredictable. And I think it's better to go to the casino and put it on red or black. That's my rant here early in the morning.
All right, so let's talk about the bank stocks. Bank of America killed down 72 cents here, 28.66. Follow through on a bad day from Friday, and we were talking about these stocks, and they broke out last week. I remember watching Bank of America cross 31, and I'm like, we're lowering interest rates. What's going on? What are the catalysts? And that turned out to be one hell of a fake out. And I'm going to look for Bank of America. I'm just talking this technically, not fundamentally at all. If this gets in the lower 28 handle, I can't short this down to 73 cents.
It's hard to chase from the hole.
Exactly. So if you get a lot of carnage, you have an earnings gap to fill at 28.32. So I'll look at that as support, and then I'll just simply look at resistance. 28.91 was Friday's low, so that could be some resistance for you. So that's what I'm looking at for Bank America. Dennis, you want to give any?
Yeah, I just want to say the banks overall. So we
Sure.
started seeing the media really perk up here in the last 2-3 weeks saying, okay, the S&Ps are rallying. We now have the banks participating. They haven't been participating. And this is what's really going to drive us, higher here and take us to the next leg up, Dow 30,000 or whatever. I saw this happening on my Twitter timeline, my stream. In 3 days, the banks go from looking okay to completely broken. And we've talked about the fundamental story. This is why I do not own any banks. I literally have like 100 stocks in my long-term portfolio. I have a couple small Canadian banks, but I would bet my overall bank allocation, I guess through ETFs, you might have some too, but direct exposure to banks, I don't have any of them. And I've said that before because I've got two major concerns. One was always Deutsche Bank. The other major concern that I have is oil and the small oil companies. And I think there's going to be some bankruptcies in oil. I think some of these banks are going to be eating it. And, yes, and we've had a low interest rate environment for them too. So that's not good either. So everybody who cites the PE of 7 and 8 on Bank America, they've been value traps for a long time. Even if you say, oh, no, well, they've done pretty good in the last 6 months. But let's look over the course of the last 5 years, I guess.
So it's a financial crisis.
Well, it really, when you look out, if you want to go all the way back to the financial crisis, sure. I mean, Citigroup's never getting back, but that's a different story. They almost went bankrupt, all of them. So, obviously bailouts is what saved the banks. So it's a little bit different story here now. We're not in a financial crisis. And, is there value there? Yeah, but there's risk too. Don't think there's not risk. So, but I just look at these charts here, Joel, and what you're saying. Look at Citigroup. You just looked at Bank of America. It's ugly. Citigroup, $72 3 days ago. It's now 66. It's quite a little 10% fall or almost 10% fall in 3 trading sessions. I mean, at a certain point, is there going to be a bounce? Sure there is. But where is that bounce going to be? And are you buying a stock that's really been in an uptrend for a long time? Not really. You look at Wells Fargo, and Wells Fargo has been one of the dogs of the group. We know JP Morgan's been best of breed.
Correct.
The one that's held up, but Goldman doesn't look as good now. Morgan Stanley chart looks completely broken. I mean, it's almost given back its entire rally from June. So we had that nice rally from June to July, and it's almost gone in 3 days. The banks do not look good. That being said, you're absolutely correct. Are you going to come in here and short them now? I mean, this market has been the fade trade. When stocks are looking like they're going to break out, it's been up better. And Gil Morales has said this on our show too. In this last 2 years, it's been better to be fading the breakouts. And when they're starting to look like they're breaking down, it's been better to buy them. So that being said, maybe this is going to be your opportunity to buy the banks. But there's so many unknowns here. I think there's better. If you're looking to buy dips, I think there's a lot better stocks to buy dips on because you got dips in everything now.
And there's a lot of the tech stocks here. I'm looking at Microsoft, Apple, Amazon, Google, all these stocks. Since they're, the other thing too is like, man, oh man, I thought we had good earnings reports from these companies.
It all changed with one tweet. Everything changed with one tweet. I mean, Amazon was, leaking and it's still leaking. We talked about the potential for Amazon to pull a 3M and leak and continue to go down. It's the market that's really caused that to happen, though, obviously, and Trump that's caused the continuation here. But look at Amazon. Here we were $2,000 7 trading sessions ago. We're $1,777. I mean, you get down near 1,700. And, and that's not out of the realm of possibility. It's losing money. It's losing, market cap so fast here in the last few days. Sometimes there's a capitulation event and that's it. I think you get down there. That's a stock I'd be more interested in buying the dip on. I don't know long term again because I'm a little more of a value guy, but short term trading, I am going to look to buy the dips on some of these stocks eventually, but not the banks. That's where we went for the tangent. But
for Amazon here, where are we trading at? We're trading down $45. There's $17.78, and you can just you guys know I'm not great with the levels on these stocks just because they're so crazy, but you could just look at some daily lows that you had in June, 59.49, 26.13, 15.25, and then under 1,700, there's a pair of lows at let's call it 16.75. That's $100 away, and maybe we're not going there today or tomorrow or a couple days, but if you keep these levels in mind, you'll be surprised over the course of time because we do a show day to day. and we say different things, and we try and give a little bit of long-term perspective here. For this one, I know you tried to swing long in it when we were on the phone the other day with Gene.
Stopped out on I was trying it off the Fed. I thought if they ripped off the Fed, it might work. I was in it for a little bit, and then I popped out. I lost 8-9 points on it.
Yeah, but the thing about the trade is, you did the trade. It turned out to be a losing trade, but exactly what you said to me was, hey, it looks like there's a pair of lows here. I'm going to take a shot. If it takes out these pair of lows, I'm out.
Defined risk.
Right. And you risk 8-9 points, right? With an Amazon, which is like, less
than 1%, 0.5%.
Yeah.
You got to risk 8. You can't go in a swing trade in Amazon, not risk like almost 10 points. Because you get chopped out. The thing trades with a buck spread. So I had a level. What Joel was talking about was right on Fed day. It came to 1890, and that morning it bottomed at 1890 again. If you were able to look at the chart from those 2 days, and then it was hanging out at like around 1900. So it literally had 2 lows that were almost identical at that point in time. That was that? No, I'm at the wrong level. This was more recent than that, wasn't it?
It was 1890 54, and then 1883. It was 1883 48.
I think I'm getting the days confused here, but anyways,
Okay.
It was set up for a double bottom. It bottomed at the same level it bottomed at the day before, and we look for setups. Joel taught me that one. I look for setups. I look for when stocks have a low, and then they make the identical low the next day and start to rally off of that. Sometimes I take a shot because I was like, okay, that could be that potential for that 2 days of low. Just like the same way in Amazon had the 2 highs, identical highs from the July 24th and July 25th, 2001 30 and 2001 20. You can't get better than that. So those are like setups that I look for, that I look to, a reversal offer to go the other way. So in that case, I wasn't looking at Amazon, but in that case, I would be trying it from the short side and I'm saying it's not going to breach yesterday's high. And you've got yourself such a nice defined risk level that you can put those on. I do those for day trades too, when you got the little setups there. And I had one in Bed Bath & Beyond a couple weeks ago, and I hate Bed Bath & Beyond, but you know what? It was it's set up, and it was the day of July 23rd and July 24th, 913, 2 lows identical. So I think I ended up buying it at 919, and I sold it a few days later like 980 and 990. So that's a nice little trade in there. So it's not like you can't go long a stock in a downtrend. I don't like to go stocks longs and downtrends, but if it gives me a little clean setup like that, we have 2 identical lows. Sometimes they're like, you could squeeze them for a couple days here, and that's what they did. And now it's obviously proceeded to take out those lows and go down. So it wasn't like I was sticking this in my long-term portfolio, but as a trade, I had a defined risk. You can put on any trade as long as you know where your out is. And it's nice when you have those 2 lows in a row because you really know where your out is.
And just we're getting a mention here about another Trump tweet here. And Dennis, before you came on the pre-market show, I stepped away from the desk a little bit early on Friday. And when I came back to look at it over the weekend, we had this one spike to 29.45. It was like right about 3:45. Were you at your desk at that time, Dennis, when we just had a wild spike into it must have been like 10, 12?
At the end of the day.
Yeah.
Yeah, I was there. You get a lot of, it was a crazy day. So you do have jockeying at the close and people positioning over the weekend. So typically when you have a day or a couple days like we had with excess volatility, you're going to really see volatility on the close. Institutions are positioning. They're saying, I don't want to hold in the weekend, or others are saying, I think there might be something good. I want to hold it in the weekend. So you do see some violent moves often in the last 10 or 15 minutes. At 3, remember the imbalances in New York ones and NASDAQ ones come out at the same time now at 350. They keep changing these times every few years. It was always 340 for New York. Then they went to 345. Now they went to 350 where they match the NASDAQ and closing imbalances. But that information is all disseminated on the floor very early too. There's, floor traders that get the closing balance information on the main stocks, starting at 2:00 because they're looking for offsetting information there. So, and you can subscribe. Actually, you can subscribe to those. Rosenblatt has a great service that you can actually subscribe to the early service and get a feel for if there's going to be some buys or sells on the close. But anyways, so that's what your volatility probably is, just institutions jockeying on the close. And you do see that excess movement right before the close.
I want to pick up a couple things from the chat here. Edge Seeking Missiles asking Triple D on those double high or double bottom or double top trades. Are those taken if there's a relation to action in other stocks, or is that just kind of independent?
Sometimes. like if I'm looking and I want to get into a stock, like let's just say, maybe there's something else in this that's sector related, and I want to be like, even in a case where right now today, if the banks were to rally, I'm not going to short Bank of America down 2.5% because you lose a lot of money chasing like that. But if we were to get like a nice rally here, like maybe we get a relief rally, I call it a dead cat bounce in the next couple days in the banks. That's when I'm looking to short. So I'm always, and this goes right back to it. I'm always looking, if I'm, bullish, I'm looking to buy dips. And basically stocks and uptrends, I'm looking to buy dips, and in stocks and uptrends, I'm looking to sell rips. So always just kind of going through that. So Bank of America and the banks, I'm kind of biased a little bit, in my opinion here, at least in my trading feel, to sell them. But I don't want to sell them when they just drop 10% in 3 days. What happens is sometimes you get a relief pop, and you maybe pop back up to like 29.80, 29.30, maybe, out of hopes that there's going to be a deal. We don't know what it's going to be. That would be the setup to short. And maybe you get a day where, the old high is matching yesterday's high. Looks like it's going to come up and retest yesterday's high. Then I got a clean setup. And then, I'm kind of going with my overall thesis too. So it's timing. Like this little double top and double bottom is kind of timing in an overall thesis. Sometimes, and Bank of America had a good one too, just coincidentally talking about Bank of America. Holy cow, Joel. That 3106, 3106, look at that.
We were talking about, I know.
I think we may have even mentioned this a couple days ago on the show, but holy cow, July 31st, it's right on the money. I mean, 3106, 3106. So
Yeah.
again, that gave
back a little bit farther. Go back a little bit farther to May.
You got another 31.
Yeah.
Just a nice clean level. So those are nice setups. That's like, the pitcher's throwing it up the middle for you. So, okay, I'll take a swing at it. Maybe I'm still going to strike out, but, I might be able to actually, get a base hit or a double or even hit it out of the park on that because it's a clean setup. So on the charts, I've always got, the chart is kind of for my timing more than anything. I've kind of got, an idea. Like when I start today, I'm like, okay, well, TLT is way up. I know the banks are going to be weak. Utility is going to be relatively strong. So I kind of have that in my mind, unless the markets significantly change over the course of the next hour. That's what we're looking at. So I'm biased to be selling banks that might not open that week. I'm biased to maybe be buying some utilities that might not open that strong. But again, on a day like this, everything's going to get hit to a certain extent, unless it's gold. So there's a lot of variables always here. You're juggling. As a trader, you're always juggling the balls.
I just want to mention too, could just do a live illustration of what we're talking about for a swing trade. Abner's boy is asking about a glue bounce today, glue mobile. Got shellacked. So here's your setup. All right. You got weak market, right? 430 low yesterday. It did come off the low. So now the question is, is that low going to be protected? So if this, if they hit it, where is it trading now? It's trading down just a couple cents.
459 to 480. It's probably going to trade down 15, 20 cents with the market.
Right. So if it gets down like 435 or something, or 440, closes 460 today, then there's a legitimate shot for a bounce here. Who cares if it's going to be a real bounce or not? You care what your out is, and your out would be a 430. If you knocked out, you get knocked out. Tell you, there were a lot of sellers on that on Friday, 22 million. So versus 3 million the previous day. Sometimes you just get a little seller's exhaustion. Like they'll hit it today, but it won't really rally. And then it will just hang out here another day, but not really rally, because everyone is getting out of the pool is getting out of the pool here. So your best scenario, you hold the 430, you put in a double bottom, the volume kind of comes down, and then maybe you get an upgrade. I don't even know if anybody covers this, but no one covers it. A little catalyst, but that's kind of putting in.
I think the point you're making here, though, is if you were trading this on the long side, I would absolutely not be. It's a stock in a downtrend. This is a stock I would more want to sell on a rally, because the stock is in a clear downtrend, and downtrend stocks continue to go down. It's just the kind of market we're in. So I'm not looking to buy this, but if I was saying, okay, I think there's a potential where you could get some relief pop, a dead cat bounce. It's a Bed Bath & Beyond trade is what it is. I would absolutely will not want to own it below 430. So if we get down there to 440 and say, okay, I'll take a shot. This is just a hypothetical setup example for what Joel is saying. Gets down like 440 today, I'll take a shot and say, I think 430 holds. I'm going to hold it until the 430 is breached. That could happen 5 minutes later. That could happen 5 days later. It depends on your time frame for your trade, but that's the setup. But again, this is a stock in a clear downtrend. I think personally, eventually the 430 is breached, which is probably why I'm not going to take that trade. But it's, on the opposite scenario, maybe I would look and say, okay, let's just set this up. 546 was the high on Friday. It's a stock in a clear downtrend. There might be a little relief pop there, but maybe I'm apt to sell short at 540. I say if it gets back up there over the next couple of days on a relief, I might sell this stock in a downtrend and saying I think eventually it's going to go lower. If it goes back up and takes out the high of 546, that's going to be my stop out. Maybe I give it to 550 or 555, but that would be it. But it's funny how stocks tend to have these little areas where they have double bottoms and double tops, like back-to-back days. And those are nice setups, and those are clean technical setups, and it's trades that I do like to take. Like I've talked before, I'm not a big, technical trader. We talk the technicals, but Joel does a lot better job with the technicals than I do. I talk relationships usually when I'm on the show. Like, what is this going to do? I don't really care what the Bank of America chart looks like today. I know that TLT is going to, with it up that much and the market's being down, is going to really drive a stock like that down. So, that's the relationship based of it. So there's lots of balls to juggle all the time. The technicals kind of just give you your timing into those trades and those setups.
And also just another thing, Abner, another thing adding significance to that 430 low is your low in June of 2018. You had a monthly low at 434. So there, so it's just not out on an island by itself. You do have another monthly low, but that's enough on Glue Mobile. I just want to take a quick look for Eduardo Ramos. He's asking you about Roku. And that has had a quiet couple days here. We got it trading in the red with the market.
Yeah.
Still in a defined clear uptrend. But I don't know. Maybe get interested in the lower 90s, Dennis.
Hard because it's just ran so much. So it's a harder one to control the risk on. I would say, this is definitely in a clear uptrend. So it fits that bill. And if you're looking to buy the dip and you really like the story, valuations are crazy, and I don't understand what trades up here. I think long term it's a lot lower, but short term this is stock that's still in favor. So, it's going to open. It's 97 here this morning, so you're going to take out all those, and you're obviously in a really weak market. If you got down there and test that 90 area, maybe you take a shot at it. Again, this is a Netflix story as well. For whatever reason, Roku and Netflix are very related. That's when Roku started to show some weakness, was off the Netflix report. It did bounce back from that, but that was more of a selling opportunity. It's kind of been weak ever since. So keep an eye on Netflix too. Netflix is an interesting setup as well. There's a stock that, is obviously got a crazy valuation, but everything, you can trade anything. So you got those three lows right there, 305. So 305, 81, 306, 307, 25. Today you're 311 on a washout. Maybe you test that 305 again. Maybe you take a shot. Maybe you say, okay, it's enough. We've been down for 3 straight days in this overall market. I think eventually we're going to have a little relief pop. Stock like that at 305, it gets to 306. Maybe risk yourself 2-3 points, and try to go for 6 or 7 points on a pop. So stuff like that is not a bad setup. But a day like today, I definitely look. I'm not looking to chase, and I might actually be looking. The fade trades have been working. So could we be down 800 or 800 Dow points today? Possible, but not normally. Usually, the washout happens, and then you start to see a little relief after like 9:45. Maybe a little bit of buy the dipping comes in. So, I might try to play at that too. Maybe you get a washout on Netflix down to 305, 306 in the first 20 minutes, and maybe you get a shot to play for a bounce there. But you've got to have your out. So if it starts trading 302, 303, I'm going to say I'm wrong. I'm going to turn around and sell it. So that's, as a trader, you got to protect your capital as much as you can.
For Roku, also keep in mind earnings Wednesday after the close.
Oh, that's important. That's a great point there, Spencer.
Yeah, there you go.
And obviously, you feel like you're coming out of earnings season a little because the big stocks have kind of reported. But now you get into these small, and not that Roku's small, but comparatively speaking to an Apple, Netflix, it's smaller. You're starting to get into like the mid caps, a lot of them reporting. So still a lot of companies reporting this week, and obviously some big names as well. But we kind of went through some of the real mega cap names. There'll still be some coming, but you're starting to get into the more mid-cap stuff. And then eventually, you get into the retailers, and then it's the end of earnings season. But, it really lasts for a good, another 3-4 weeks we've got of earnings there. Really, when you think about earnings season, there's really only a month where we don't have really very many earnings at all.
Yeah. And Noel, rhymes with Joel, is just made a comment on a stock that I own, for full disclosure. Twitter has been holding up pretty well during.
Really well.
I know.
There's a stock to buy, try on the pullbacks, because this stock is loved right now.
Yep.
Stock is down like 40. It's interesting setup. So, I mean, this stock is, look at the resilience in this thing. These are the kind of stocks you buy on the pullbacks. You know, here it is down 2% today with the overall market totally throwing the baby out with the bathwater. Not that, you know, long term we're just talking as a trade. This is completely in favor right now. And it's been holding up very well and shrugging off a lot of this news from China from the last 3 days. So this is a way better stock to be looking to buy the dip on than a Glue Mobile. Way better.
What about the House of Mouse, Dennis? I know
I've been nibbling still in the House of Mouse, and that's a long-term. That's in my long-term portfolio. And yes, it's breaching the 140 here today, so that's not great news. I hope it gets down to like 135 so I can buy more. I want more Disney. I want Disney to eventually be the biggest position in my long-term portfolio. It's a sizable position now. I've added to it. I've bought it a few times, but I want to. I've been buying it actually as it's going up. It's raising my cost basis. I hate doing that. But I really like the story. I really think Disney is eventually going to be a $200 stock. So it's just my opinion. You know, obviously it could be wrong, but this is, you know, we know they've got the parks, they got the thing. The PE is not the cheapest in the world, but I think that the wild card, like I've said before, I've talked about this multiple times on the show. The wild card is is it going to be their new product, Disney Plus? And if they give that some valuation, this thing could really take off. So I like Disney on the pullbacks here too.
And Dana is coming home from there today. She did her bachelorette party at Disney World.
That's fun.
Oh, they had a blast. They did. Little Emily set it up for her.
Nice.
Just real quick, before we go to imbalances here.
They're all sell, by the way.
Stock is throwing a stock at me. That BL, is that Bausch and Long or what is that?
Black Line?
Black Line.
I knew it.
Wow.
I didn't bring it up, but I knew it before I even thought.
What is
Not
that?
a stock I trade at all. I don't know what the news was on Friday. Was that taken over? No.
They had earnings on Thursday afternoon.
I don't follow this company. I knew
What do?
It was. I've traded it maybe once or twice before, but I don't know anything about it.
I don't know anything about it. That was a good day on Friday, so obviously I'll be keeping an eye on the close. And then one level only, 58.01. That was the all-time high made in September of 2018. So that's what you go. I mean,
probably going to be pulling back with the overall market.
Exactly.
The candle from Friday makes it tough to trade because you had a range of 48.91 to 56. So where's my out? How do I control the risk? If I decide, okay, I'm going to buy this at 55. Well, okay, well, it could go down to 54 or 53 or 54. It's still not even at yesterday's low. And you're not probably getting to yesterday's low, 48.91. So I have no idea how to control the risk on this. So that's probably, I don't even see a possible setup for this. I guess if you start breaking out, making new highs, maybe you think this is just going to continue to go. But I don't follow the story close enough to know why it was up that much besides good earnings or whatever it was. So, and the candle's too wild for me, so I don't see any setup here at all.
How about this is a better one for you, coming from, I can't pronounce that, but it's in the Google chat, and they're asking about PayPal, which has had the hurt put on it.
Yeah, it's just a love stock.
Okay.
So this is one that has been pulling back since earnings. And again, we keep citing the 3M. When they pull back significantly on earnings, you kind of got to wait till they stop going down. This has not really stopped going down yet. That being said, the stock was very loved. It's still, you think about you get to $100. I would think it's going to bounce at 100.
I'm just going to give you a shorter term level here, and it's just because we're down so much. Sure. I have a little interest in 104 where it's straight.
That low.
Yeah. It's where it's trading now. It seemed to be taking a little bit of breather. There's only one daily low to lean on there at 103.96, but this would be the one that, if you had, let's say you caught this thing short after earnings, I mean, I'd be more in the buy zone area from 104 down to 100, as opposed to, trying to short this thing at 104. But it's definitely in a downtrend.
This is way better again. So it's not really in a downtrend. I wouldn't even say it's in a downtrend from the last month. The stock's in a clear uptrend over the course of the last year. It's been a great stock. It's a love stock. Twitter, PayPal are stocks that I would actually be looking at to buy on the dips. Not long term, but as trades, because these stocks are still in favor. So, yeah, it had a crappy earnings report. Yeah, it's been pulling back since. But still, overall, it's still in favor. I think you get anywhere near 100, you're going to find buyers. So you're taking a shot at 104. I probably would want to give it to 100. But if I was in it for a swing trade, so maybe I want to buy it a little bit lower than that. But washout day today, maybe on some of these stocks, potentially. I don't mind the setup here of, buying a little bit of PayPal.
All right, I want to bring on today's guest now, Sean Emory. He is the founder and CIO of Avory and Company. Sean, good morning.
Hey, good morning, guys.
How's it going this morning?
Good. How are you?
Doing well. We were just talking about PayPal. You mentioned to me that you like PayPal long-term. Why is that?
Yeah, we like the payment space in general. Probably touches every consumer out there globally and obviously domestically. So you're kind of always in the game in terms of consumption. PayPal in general, I know you guys were just talking about the chart here the last couple of weeks. They've struggled post their earnings and then obviously post Square's earnings. So negative sentiment all across payments, but PayPal overall is a strong story just because it's in that fintech kind of Venmo plus the core PayPal part of the business is really exciting to us.
So long term, you like it. Do you place intermediate swing trades in the meantime, or you just play stuff long term?
Yeah, I mean, look, so we pay attention to the charts for sure on entry and exits. You guys mentioned that 104 level. This seems the one that makes sense today. If you were actively trying to participate, anything under that, you can kind of see below that 104, it takes you pretty low to kind of mid 90s. So again, I agree with the thesis earlier. This isn't a structural uptrend, but here in the short term, it's much more, I'd say trading in a range up to its highs, down to its this 104 level.
Sean, what about Square? It had an awful day on earnings. It's kind of the victim here of the overall market here too. I mean, the worst time to report, the day after Trump kind of starts on another trade war with China. Square gets hit really hard on the earnings report. Now it's down here again. What about the long-term thesis in a stock like this? I mean, valuation is an issue here, obviously, but what are your thoughts here with Square?
It sure is. I mean, we felt the brunt on Thursday, Friday of the Square move. So we've been holders in Square, full disclosure, and we love the story there. Again, it goes back to the core thesis of payments being such a big opportunity. The one thing they broke out was their Cash App usage. I mean, June saw 3.5 million users using that actively. That's a big number. Then you have their core business, which again is doing 100+ billion in purchase volume through that system. If you look at kind of non-financial metrics, you look at App Store trends, Cash App's #1 finance app for 2 years in a row. This hits that core user of kind of the future, and people are using Cash App as a real means of whether it's kind of side business or for peer-to-peer. So you hear a lot of people talking about Venmo as kind of a core peer-to-peer, but I think Cash App's actually being used for things like haircuts and kind of your very small business operations, and that fulfills that Square's mission. So we like Square. We think the opportunity set. If you're invested in Square today, you're not investing with kind of what you can see today. You're investing in that platform that they've built where they have Square Payroll, Square Capital, Square Payments, Cash App to go alongside of that. They opened up their delivery network by selling caviar for $410 million. And yeah, later this year, they're going to be getting the purchase volume of Eventbrite that hasn't clicked in yet. Eventbrite does $4 billion in volume to their system and $3 billion domestically. So we expect that to be a catalyst down the road. But for now, it's negative.
There's a lot of, in Square, there's a lot of stuff that eventually is going to contribute to the bottom line. And I've seen some earnings estimates from some analysts on this that are looking out to 2021. And some people are saying it's going to earn $1.50 or $2 by then on the bottom line. You start thinking about that and you say, hey, this thing at $66 is growing like crazy. If it really could get to that earnings level, trading 25, 30 times those forward projections. And we don't know if these analysts are right or not. Obviously, it's all estimates, but you can quickly see that, it's maybe not as, crazy valued as everybody thinks it is, in my opinion.
Yeah, no, I agree. Look, they spend a lot on their platform for growth, and that's what they've done every quarter, essentially.
And that's what's hitting the earnings.
Yeah, they said, we're going to grow our revenues, and we're going to take our profitability, throw it back in the business and grow this thing. And sure enough, you have an economy growing at 2+% and a company like Square growing at 43% revenues top line. So they're doing something right. They're taking share. You compare them to PayPal's numbers, compare them to Fiserv or some others that are in this space. They're taking share and growing their ecosystem. So again, like you said, I think in a couple of years, it's only a matter of time until they want to use their lever. But I think growth and user base is much more critical today for that story.
I mean, it's kind of like the Amazon model too. I mean, Amazon hasn't worried about the bottom line forever, and we've seen how, while they've performed doing that, obviously taking, just growing that top line, and that's kind of what Square is trying to do in the payment space, is it not?
Yeah, for sure. I think, and the opportunity set again is massive. They have one core platform that they've expanded on and just continue to plow software into it, right? It started with this little hardware piece, and then has turned that into essentially building software and using machine learning. I think it's a benefit that Jack Dorsey comes from Twitter, that he has used all of that kind of machine learning, data science training, using that in core of Twitter. And he's kind of brought that knowledge to Square for their Square Capital business, where they're underwriting businesses without even talking to them and in real time, and then generating that loan payment back through transactions. So each person that swipes the card is paying the loan back for that business. It's an interesting model.
We're on the line with Sean Emory. He's a founder and CIO at Avory and Company. Joins us every few months to give us updates in the markets. But if you're going this heavy into the payment space, right, and you're talking about Square, and you're talking about PayPal, and of course you got your old stalwarts, MasterCard and Visa, where does Bitcoin fit in all this as far as the payments and the ease of transactions? And if you want to pass on that, you can too. It's something, though, that trading up in the market today. I mean, do you think about that and its effect and its role in the global payment system?
Yeah, I mean, look, domestically, you don't really see it as a form of payment yet. I think that's key. And again, if you did want to play in that space, I'm going back to the old Square. The Cash App, you can buy and sell Bitcoin on there. So you can have some sort of wallet, if you will. That's a mechanism of kind of playing in the space as that space either grows or doesn't grow. But there, at least you have kind of a core business outside of Bitcoin itself. Again, Bitcoin is something that we've been following. I think we've all been following it, trying to better gauge, is it going to be a day-to-day use? Is it truly a store of value? And I think that's still up in question. Today's obviously a good reflector of money flowing there. Maybe it's because of the time or the hours that Bitcoin trades. But again, tonight I think or last night was a good evidence that potentially you're starting to see it as a means of safety. I don't know if
the gold trade, the digital gold.
I don't know exactly what you. But in a sense, from a core business standpoint, I think if you're trying to participate, there's a couple different avenues you can participate in, and Square's Cash App is one of those, outside of just owning Bitcoin itself.
Sean, we were talking earlier about retail, their earnings, and retail earnings are coming up here. Any favorites you have in the space?
Yeah. So this Wednesday, actually, Capri Holdings, Michael Kors, Jimmy Choo, Versace. That's the conglomerate now. Call it the LVMH of the United States, or trying to be. They report on Wednesday. So we're big holders of Capri. We believe in the story and the overall strategy they're putting together. They had their investor day like 2 months ago. We came away very, very impressed with what they're trying to build. We don't know if this Wednesday it's going to be evident, right? I mean, the story is really just starting. Retail is not a place that anyone necessarily is wanted to be in. The tariff talks didn't help at all, despite Capri not necessarily having a massive exposure to Asia from the manufacturing side. They do on traffic in terms of selling in airports and whatnot. But again, they report on Wednesday, and we're just looking forward to hearing the store count growth. You don't hear too many retailers talking about growing stores, so they should be growing stores in for Jimmy Choo and Versace. And then on the Michael Kors side, which is still the core of their business, it's just looking for stabilization, +1, -1, same store sales. And that would just show us a sign of stabilization in that business while they grow the other two. And they've proven that they can grow. They took Michael Kors from 100 million to $5 billion in revenue over time. So I believe in John Idle, the CEO. He can build this. And right after his investor day, he put 20 million of his own capital, his personal capital, to work into the company. So I like the incentives that he has. At the same time, his execution background is impeccable. So.
What about Eventbrite here? You mentioned that and its relationship with, I think it was Square moving forward. Eventbrite had its IPO. It looks like it was time to go. Gap down, tried to recover. Gap down, tried to recover again. That one ugly looking chart here, I'm almost starting to get bullish, Sean. Talk me out of it. Yeah,
I mean, look. Again, Square has an investment in Eventbrite, $25 million investment when they went public. You can get another snip of Eventbrite through that without taking depending on Eventbrite's pure business. That's an expensive company. They compete with a lot, or in a sense, right? I mean, everyone's trying to be the event planner of kind of society. Everything from your Facebooks to your Yelps and some others. So it's a highly competitive space. Then you have the core non-public companies that are selling tickets and trying to build their own planning and event product, if you will. And again, I think structurally, Eventbrite's just kind of in a from a competitive landscape in a different spot. For me, I follow the story obviously because of the investment from Square. I don't love it from a pure investment standpoint, but I get why they would partner to try to take advantage of that $4 billion, $3 billion in purchase volume. So I'd stay away from that chart. It doesn't even look like anything connects. And yeah.
All right. Sean Emory is the founder and CIO of the Avory and Company. Sean, as always, thanks for the time and have a good one.
No, thank you guys. Have a good one, guys.
All right. 8:47 here.
Nothing good to report, Spencer. We got a little pop. Now we're coming back down towards the lows of the session. 85.75 is your current low in the S&Ps. You spent a little time in the 28.90 handle, but now falling back. June 14th low, 84.25. I think if I'm going to try long off the open, which I doubt I will, I'd be using a very tight stop because underneath that, your next daily low comes in at 28.71.50. Triple D, the sellers ganging up over there.
It's just selling across the board. And like we cited already, the banks are very relatively weak. Citigroup is trading down 2.6%. Bank of America 2.6%. Morgan Stanley 2.6%. Man, the arbitrage traders got these all things trading the same here right now. That's crazy. Wells Fargo's always a little bit more. It's less. Its beta is less than the other ones. And JP Morgan's is as well, but 2.3%, 1.98. The banks are getting the beats. Really, when I look at my screen, like I said earlier on the show, gold is up. The gold stock's going to have a nice day. The utility is trading slightly in the green, but I'm not even sure that holds because they're stocks, and it seems like in some days like this, it's funny. You know, even with the TLT up as strong as you automatically think, oh yeah, XLU is going to rip on this. You've been seeing XLU not participate in the recent TLT rally. Look at the TLT. Look what the banks have done. The banks have been direct opposite to the TLT. And then you have the XLU, which often does move with the TLT, not really participating. I think you start to get into a valuation issue with some of these utility stocks too. I mean, they don't grow. And, you know, they play defense. And yes, you know, they usually hold up well in a downturn in the market. But at a certain point in time when the market starts going down, everything starts going down. Gold stocks are their own animal. I know we've had JC Pretz on here saying there's no correlation at all. I don't agree to it completely, but I'll say sometimes gold is just doing its own thing. Right now, gold is doing what it's supposed to do, is go up and in the down market. So when I'm looking at my screen right now, all I see is really that's strong as gold. That's it. Crazy. Like every sector, just red.
And did we have any earnings reports that are worth mentioning today, Spencer?
I mean, there are a couple. We had Berkshire over the weekend, and I guess that's always interesting. They said they have a lot of cash on the sidelines.
Yep.
But that's one of those, you know, super high price stocks that
it just trades with the overall market here. It's down 1.6%. It's right on. I mean, it does not really trade. It's very rare to see Berkshire have a big move off its earnings report. Yeah. So typically it's just going to move. We know what the holdings are. It's going to move off the value of the holdings. They got big holding in Apple. Sometimes you'll see if Apple has a really good day, Berkshire will have a better day. But overall, it's just moving with the market.
We also have Tyson Foods reported this morning. They beat on their EPS, missed on their sales, and reaffirmed their guidance. And Cars.com, not a good morning to lower your guidance, which they did this morning.
Ooh.
They beat on their EPS, missed on their sales, and then lowered their sales guidance for the year. Let me see here. They lowered it. Oh wow, they lowered it by like $100 million. So not a good morning to do that for Cars. Cars and Tyson, the biggest ones this morning.
Cars.com is starting to look like pets.com. That's all I'll say.
Who needs cars? I mean, I'm not going to go into that rant again. New all-time low here. Someone is just out. Get me out. 1090s, your pre-market low. I think you will maybe someday see a bounce in this thing, but for right now, just step down seller in this 1090. Maybe see what that low print is right before the open, and then see if that holds. But not looking good. And then for Eat More Chicken, Tyson, it had a big pre-market range, but what I would do is I would focus on the range from the last two sessions. You had matching lows at 79.76. That's where you're at right now. So absolutely critical to hold that, get up and rally, maybe test Thursday's close at 80.39, but you got a triple top at 81.50. Under the 79.76 area, look out, folks. You got a quick buck drop to 78.66. But you have yesterday's ranges Thursdays and Fridays ranges pretty much matching. So use those as early guidelines here in Tyson Chicken. And did you say that they also had some government subpoena or something?
Yep. They said they received a grand jury subpoena from the DOJ related to just, I think, information about the industry.
Okay. And what else do we got here? We have about 8 minutes left.
It's just right across the board. We can go to sectors. I mean, if you want to go to a specific sector, they all look the same. Everything is down 2 to 3%. It's like this when market volatility rises, correlations really kind of start to come together. You ought to adjust them for the beta, but it's amazing that you can just see, a stock is a stock, it seems like today. Even some of the defensive stocks like that are made up in the XLP are trading fairly weak, relative to their betas here this morning, but they're all down too. Procter & Gamble's down 70 cents here, which has been leaking since its earnings report there. Coke is trading down. I mean, you even got those stocks trading down. So it's hard to really find. That one stock's been really ugly and is trading down here again. It's Pfizer. It just will not stop going down. I obviously wish I would have sold it out of my long-term portfolio. I said I talked bearish on it back when it was $42.50 there just last week. And I said, I own this in my long-term portfolio. I've had it. I think my average cost base is $14. So I said, I'm sticking with it. But that being said, I said, it doesn't, I didn't like the idea of that merger, paying up for that. And it's obviously came out and the guidance wasn't great. And they've hit the stock ever since. I mean, it was terrible. That was a huge down move for PFE.
All right, we're getting some questions here about Take-Two Interactive, TTWO. I'm trying to see if there's any relevant.
Reports tonight.
They do.
They report after the bell.
That's a tough one, especially.
I've got a position on it, so I'm going to let my.
Okay. It's had one hell of a run up here since May, so they're going to need a good report here. Trading trending down $3.13. That's probably market related. If I was anything worried about the report, I'd wait for it maybe 120. You got the low from yesterday at 119.14 and the close at 121.69. So if I wanted to lighten up ahead of the report, that would be the area. Coming back on the downside, we are currently trading in the 119 handle. So if you're looking for a little bounce on this one, it's got to bounce right here, right now. Two lows from the 26th and 29th of July, 1965 and 1971. Look for that. If you're bullish here, you want to look for that double bottom to hold back from the end of July. And
what about Cisco? CSCO.
Okay.
It's still due to report. It got whacked on the net app earnings. Like we saw some of the stuff. NTAP brought down a lot of tech stocks, especially stocks like Cisco and Dell brought down on Friday. This setup is, here's a stock that is usually lower beta, but it got absolutely beat on Friday off the net app earnings. It's going to get some follow through selling here today. It's trading down another buck. I think it could bounce at 51. So just looking for a trade, I'm not sure long-term investment, although the valuation Cisco's attractive too. So I'm not even totally against. It's a stock that I wanted for a while. I'd love it back down in the 40s for a long-term investment. I don't know if we can get there though. But what do you think of the 51 potential bounce off of? You kind of throw a basketball at the floor, it bounces the first time. So that's a pretty hard floor down there at 51.
Yeah, lower.
Tested today.
Yeah, they 50. Yeah, they could. I like that. I see what you're looking at. I see multiple lows in the 51 handle.
51 and a half and 51.
Yep. That's an area where
down on a stock that's typically a lower beta, 2.68% dividend too. I mean, it's old value tech, right?
Very old.
The net app, is the wild card. Are they going to keep whacking it because of net app and the concern? When does Cisco report, Spencer? CSCO. I got some time.
Yeah, we got like 2 weeks.
Yeah, you got some time on this one. So I think there could be some nervous Nellies ahead of the report because of the net app report, but it's not even fully related to that. I mean, there's a relationship there, but anyway, that's why they hit it hard on Friday. 51. I don't know. I might try it there.
All right. Speaking of old school tech, Barron's was bullish HP, and I didn't read the whole article.
HPQ?
No, not HPQ. I'm sorry, not Hammer Licking Pain. HPQ here, and that's just trading flat. Got hit with the market. Be hard to get excited about this stock until it clears 2150. Look at all those highs in the area. That's protecting a gap area. On the downside,
$18. It gets down the 18 handle. I'm interested. Right. I bought this. I shook out of it. I stuck in the long-term portfolio. And then I was like, talked myself out of it somehow. And it's right around here where I sold it. And I was regretting it when it traded up 21 and a half. I'm getting a second shot at this. It's value tech. Again, you wonder where the growth is coming from. They have the 3D printing aspect that could be a wild card there still for some growth. That still hasn't really, 3D still really hasn't taken off and at least mainstream, but I think there's a lot of applications for it. Like I just see my buddy Pete over there at Barron's Rings and how much they use the 3D printers. They're using Stratasys and they're using 3D printers, but we know HPQ is going to be one of the leaders in the space, if not the leader in the space there as well. So I do think there will be some growth eventually from there. I don't mind HPQ down the 18s.
How about that Dell? Speaking of old school tech, private, non-private, private, public again. Dell. You got an area. It's trading down $1.40 here.
That got hit on the net app. So that's why that got hit with the net app earnings. And it got hit really hard. And I own Dell in my long-term portfolio. Again, it's value. I think you get down here 50, you might bounce there the first time. But that was a real whacking on Friday that it took. And that was off net app.
Okay. All right. I'm looking at this. It's approaching its lows of the move, 50.65. I see that as a low. In June 27th, 50.57 as well, too. Another 50. So 3 out of 4 lows at the beginning of July here. So if it comes down into that area, just be aware that you had 3 out of 4 daily lows. Just call it 50.60. As potential support in that one. S&P's hanging out dangerously low to the close of to the low of the session. 86.25 is where we're trading. 85.25 is the current pre-market low. Trying to bring it in here, so trying to rally, but really not much. Not much leaning towards that way. Analysts, did they even get out of bed this morning, Spencer?
Really. No, and I was going to say, the only reason we talk about analyst ratings on this show is because they can move stocks in the pre-market session. And when the market is having a day like it is today, that the analyst ratings won't mean anything. So there are ratings, there are upgrades and downgrades, but they're really not worth discussing.
Prudential, I saw at Citi.
Yeah, Target upgraded Deutsche Bank, and that was a Dollar Tree downgrade Deutsche Bank, but not really. Today, when the market is down the way it is, the analysts are going to have no effect on.
They have a little bit of effect, but it's such a great point you're making. And I trade analyst ratings all the time, and I'll tell you, You're exactly right. I mean, on a normal day, Target's going to be trading higher on that. It's down 1.4%. The market's down 1.4%. Maybe it's a stock you buy because it has the rating. Maybe, they do have a little bit of an influence still. They always do. But that influence is definitely muted on a day like this. A stock is a stock right now, and they're going to hit, they're going to hit a target down no matter what, even if it's upgraded, just because the market is hitting everything. So, I mean, this is a stock that maybe you look at to buy because it did get the rating change today. Sometimes I've had some luck doing that, buying a stock down 1.5% because it's got an upgrade and the market's down 1.5%. Maybe, you do a little target / buy pair. There's different ways to go about it. But again, retail is kind of like ground zero right now too for this trade war. I mean, so many things, maybe not Target specifically, they got groceries, they got other things, but retail really got hit when we started this trade war up with China again 3 days ago, because hey, let's face it, a lot of this stuff comes from China.
Someone has opinion at 85.25. That's all I can say there in the S&P futures. We bounced off it a couple times. If we do get in a good rally mode, we can get back over 2,900. My sell zone area is going to be from 29.10. That's mid-range on the session to yesterday's low, which comes in, or Friday's low comes in at 29.1350. Something happened with oil. Oil just plunged again, so that's not going to be good for the market. Just a quick look on oil. You do have a low. You took out the 53.9 here. What is going on?
These oil stocks are just a disaster. It's been my best move to basically liquidate every oil stock out of my long-term portfolio. I had a bunch of them in there. I still have a little bit because as a Canadian, there's so many oil stocks to invest in, right? I still have a few of them, but I mean, like I said before, almost in the indexes, you get nailed a little bit in the Canadian indexes, why they've underperformed, because they do own a lot of oil stocks in there. But man, oil has just been, unless you're in Chevron, which has been best of breed for so long, they're all just a disaster. I mean, Exxon's going to test its lows back from May, it looks like, maybe even today, 70.63. It had the lift, and what did we say on the earnings when it was lifting up over 74 on the earnings? We're like, I'd be fading that. And here you are 3 days, not even 1 day later, and it's down 5% from there. So the oil stocks, every time they seem to rally, it's just another selling opportunity. I don't see why that changes. I'm going to keep arguing that it's dirty energy, and they're finding different ways, and the electrification of cars is not going to help the oil stocks either. There's so many long-term problems with owning oil stocks. I think there's a long-term thesis here, and that's why everybody sells oil into any rallies. And oil has not been in a clear downtrend for a long time. I mean, we were $150 back in 2007, were we not? Where were we in 2007? The oil high on the barrel.
Yeah,
145.
Let me look here. I mean, it's adjusted for the front month contract.
Yeah, which messes it up a bit.
Yeah, a little bit, but adjusted for the front month contract, it comes out to $216.26. But that's
$216 if you're doing adjustments on that. And
Yeah.
Now you're looking at it at, what are we today on the oil?
54.
Yeah, so that's over the 12 years. That's the barrel. And if you look at the individual oil stocks, they're a lot uglier. And we've talked about this, RIG from $55 back in 2013 to $5. I mean, this value investors saying, oh, this is going to come back, when oil's not going away. It's not going away, but if the demand just slightly goes down, some of these individual oil stocks might go away.
All right, that's a nice positive note to end this. Thanks to today's guest.
I tried the whole show, I like to try to make it something positive.
That's all right.
I don't want to talk about that stock. It's
they're gonna throw me out of Canada for this stuff, talking like that. But sorry, Canada. I don't like oil stocks.
That was.
Go ahead, Spence. I'm sorry.
Maybe the most Canadian way to end the show possible. Thanks to Sean Emory today. Thanks to all of you in our chats, both on YouTube and premarket.benzinga.com. Catch our podcast. Available wherever podcasts are available, or rewatch our show on YouTube. Please remember, all the information from our show meant to be used as informational purposes only and not for investing or trading advice. Hope everyone has a good rest of your day. We will see you again on Tuesday.